What's up, everybody? This is the Turning Point Mentor here. And as always, I got to show my history, what I've done on this one. So this is where I'm at currently, closing 2,000 in profit. Market is currently closed. Started off with $1,000, and now I'm up. With this out the way. And now I'm up. The profit is 13.94 only because I haven't closed out my current status. So I'm up about $3,428 on this account. But here's what I want to show you beyond the profit, all that. I want to show you this. I made a video earlier, and I'm using it and it's working. And so the video consisted of me saying, um, let me go back to where I was, do time frame. So basically, let's take the 30-minute time frame, right? You look for a moving average cross, you mark it, and then you shift to a lower time frame to find the entry. So we're going to do that here, and then I'm going to show you what I mean and how easy it is. And yeah, and then I also want to pick up something that's even for those days where there is no moving average cross, but there's a continuation. I want to show you that as well. So I'm going to mark a few points, and then we're going to go to the 5 minute. So let's go to 7/7/26. Go to 7/7/26 on the 5 minute time frame. I don't know why I did that. I don't have it. Let's go here. Let's go to 30 minute. Let's go here. And we're gonna mark up 7/7. Actually, yeah, 7/7/26. So we had a moving average cross right there. We got it marked up. We want to go to the 5 minute, and it should put me. Okay, let's go back. 7/7. We should see something in that area. We should see a moving average cross before the line, the vertical line. All right, we do. So moving average cross before the vertical line. Now, after the vertical line, would you look for a candle that goes in the opposite direction? So the entry for the continuation down would be off any part, the close of the candle. So it'll be here. So you enter there. Let me take that off because I don't want that to be across the whole. The entry would be here for the sale. Okay. And then we go to it kept it from that point, that entry by the end of the day, just a low in London, that was 1,000 pips. Right. That's basically the strategy. I'm gonna go to seven. I think I marked off 710. Okay, so 710. So this is what you do when you have uh when you have a moving average cross that's already occurred and you're looking for an entry. If you have a moving average cross and it already has occurred prior to what you're looking for, you want to do this. You obviously want to see the trend being confirmed on the time frame you're looking for entry. But once you see, like for in this case, we're looking for a sell. So what you want to see is price break beneath the both moving averages, and you want to see that first candle, that first bullish candle, you want to sell there, right? You want to sell there, and you're good. That's the best entry that I've found. Um, that's the best entry that I found, and let's see where it goes. It goes from there. It goes down, right? It continues to go down. So what you could have done here's another part. Like I said, um, so let's say for instance you got this trade and you didn't want to have trades open while you sleep. So you took the 500 pips. You wake up and you come to this portion. It's still continuing down. Moving averages have not crossed. So what do? So you waiting for price to close under both moving averages, and that first bullish candle that opens and closes under both moving averages. That's where you enter it, and you can see that from there. That's another 750 pips, right? So that's really the strategy. I think I had a few more points, a few more days that I marked up. So I'm gonna just scroll over and see those. Um, but that's just really all that I've been doing, guys. I've been literally looking for moving average cross on a bigger time frame. Okay, perfect. This is the moving average cross. You go the moving average cross that appeared on the 30-minute time frame. You come to the 5 minute and you look for the first is crossed up. Okay. Look for the first bearish candle to open and close. You enter for the buy at the close of that candle. All right. So you enter here for the buy, and you let it go. All right. I believe one of the reasons why this is working because it's at the progression of the trend itself. Okay. So here from here to the top, that's a five almost that's a 500 to 590, and then you have another one where moving averages did not cross, right? You had a break above both moving averages. That first bearish candle, you enter for the buy. All right. So if you let this boy ride to the high of the next session or whatever, that was another 750, right? And that's literally all there is, right? That's really all there is. The only thing that you have to make sure you do is give yourself enough cushion in your lot size compared to your capital, and you'll be good. That's everything else speaks for itself. You go to the higher time frames, look for moving average cross, and then go to the higher time frames, look for moving average cross, and then go down to a lower time frame, either at least two time frames lower, and look for the entry at that same point. So if you wanted to swing trade, what you would do is you go to, like, let's say for instance you wanted to swing trade 1 2 trades a week. All right. So you would go to the weekly time frame. Weekly time frame, and you will look actually there are no moving averages crosses. So you will be looking now, this is where the patience comes in. You will have to wait until price breaks and close back above because there's nothing crossed. You have to wait for price to break and close above the 50 to even look for entry, or you go down to the um the daily time frame. All right. Now for the daily time frame, it's not even touching. So in order for the daily time frame would have worked if you saw this, right? So you in the last 2 months you had one moving average cross on the daily, right? And so that was what June 2nd of 2026. So June 2nd of 2026 on the daily time frame, you go down to the 4 hour time frame to look for your entry, and we go back to June 2nd and see what's there. So June 2nd, right? And this is where the patience of it comes in, and also the this is the swing trading approach from here. Same thing, same strategy, bigger time frames. Okay. So, and then also keep it in mind, you got to make sure that your capital and your lot size have enough cushion so that you can take any type of action or pullback, even in trading in the right direction. So after the moving average cross, you want to see a close under both moving averages, and that first bullish candle, that open and close of that bullish candle, you sell. That one trade right here, the open and close of that candle, and you left it alone. Now, obviously, something like this, like I said before, with gold, you want to give yourself a cushion, whatever is your comfort. If it's 500 pips, if it's 1,000 pips, you need the cushion so that you don't have to worry about the pullback, because you got the trade right. Most times, people will lose not because they got the trade wrong, but because their trade was too big to handle the pullback before the trade goes in the direction that it's supposed to go in, right? So in this case, this one trade would have brought you over a 2 week period. That's 4,400 pips. So if you had $1,000, you give yourself a thousand pip cushion, which means you trade at point one, right? A point one, that's 280 pips of drawdown for 4,500 for 4,000 to 4,500 pips of profit, right? That's one trade. And then coming into the next thing, right? Coming into the next opportunity, because there is no moving average cross. Okay, same exact thing, same exact thing. So you take one trade for 2 weeks, you make go from 1,000 to 4,500 in profit, making your account 5,500. You come back and you look for the opportunity. The same principles. You want to see price go under the moving average, and you want that first bullish candle that shows up under the moving average. You enter there at the close. So if you entered here at the close, taking that same approach, giving yourself a 1,000 pip cushion, right? If you entered there with a point five, right? With a point five, by the end of that next week, that is 16,000 between 3,000 and 3,300 pips. That's two trades within a month. You go from $1,000 to over 20 grand taking two trades. It's your approach, is your um desire. If you have a lot of time to trade, practice this strategy on smaller time frames. If you don't have a lot of trade, if you don't want to be, hold on, it's too much. If you don't want to be, if you don't want to be bogged down with the market like that, then you try the swing trading approach. You don't have to be so involved. If you're working, definitely try the swing trade approach. So in this case, you got two trades. You start off with $1,000. You go from 1,000 to 5,500. You go from 5,500 to that's six. Let's call it six. Because that's 5.5 times three. That's 15,000. So now you got 20,500 from two trades. And all you're doing is the same thing. That's in 1 month, from 1,000 to 20,000 a month, right? And then even with this last situation, the same thing. Price came up under it. You entered here at the close of that bullish candle, and you go with $20 a pip, right? You got 20,000, $20 a pip. So at the end of the second week, that's another 26,000, right? So you go from it's the same principles. Nothing has changed. Same principles. No moving average cross. So there should be a continuation. That's what we're saying. If there's no moving average cross, there should be a continuation. And there was, but you have to wait until certain criteria lines up. Price comes under both moving averages. That first bullish candle, at the close of the bullish candle, you sell, you get in for a continuation trade, giving yourself a thousand pips of cushion. With 20,000, your trade size would be two standard, which is 20,000 pip, and the market drops to 13 at between 1,000 and 1,300 pips. Three trades within 1, 2, 3, 4, 5, 6, 7. Then 7 weeks, you go from $1,000 to over 40 grand. That's the approach for the swing trader. That's the approach. Even if you're scalping, you just go to a smaller time frame to look for the moving average cross, and then you go to an even smaller time frame to look for your entry. That's all, guys. You guys have a great day. Once this finishes uploading to my YouTube channel, I'll post it to my Facebook page. And yeah, that's really it, guys. So if y'all got any questions, watch the video again for clarity. And then before you practice it or execute it in a live, execute it on a demo account. Practice the principles. Make sure that you have the steps down so that when you do implement this strategy, you will be following the exact steps that I mentioned. All right, guys, I have a great day.